All right, let's try a little thought experiment. Picture this. You've put your life savings, everything you've worked for, into the hottest new technology. I mean, every single expert, every talking head on TV is telling you, this is it. This is the future. And you know what? They were right. Your investment just explodes. It doubles, then it triples. Pretty soon it's up 10 times. You feel like a genius, right? I mean, you've cracked the code. The future is looking very bright. And then, one morning, you wake up, you check your account, and it's just gone. All of it. Now listen, this isn't some made-up horror story. This exact scenario has played out time and time again. And the scary part? It looks like it could be happening right now. With AI. So let's talk about the AI gold rush. I mean, the amount of money being poured into artificial intelligence right now, it's just staggering. The numbers barely sound real. We're talking billions, hundreds of billions, even trillions of dollars. And for a hot minute there, investors absolutely loved it. Every time a company announced some huge AI spend, their stock would just launch into orbit. But lately, something's changed. That sentiment has started to shift. You see, those same giant spending announcements that used to get a round of applause from the market, well, now they're starting to make people a little nervous. The big question in everyone's mind has flipped. It's gone from, wow, how much are they investing, to a much more pointed, yeah, but are they actually making any money from all this? And believe me, that is a huge, critical psychological shift. And here's the thing, this isn't new, not at all. It's like we've seen this movie before, you know? The script is the same, just the names and the technology have changed.
I mean, just look at the historical pattern here. Back in the 1800s, it was the railway frenzy. Absolutely world-changing technology, right? But most of the people who invested got completely wiped out. Then it happened again with electricity and the telephone. And then, of course, the big one that most of us remember, the internet.
So does any of this sound a little familiar? Let's break it down. During the dot-com bubble, all you had to do was slap a .com on your company name and investors would throw money at you. Sound like anything we're seeing today with .ai? Back then, stocks shot up 12 times in just a couple of years before the whole thing came crashing down. And today? Well, we're seeing that same kind of parabolic, straight-up rise. The aftermath last time was trillions of dollars just gone. The aftermath this time? That's the big, scary question mark, isn't it? Okay, this right here is probably the most important thing to get your head around because this is where everyone gets it wrong. The technology can be 100% real. It can absolutely change the world just like the internet did. But at the very same time, the investors who chase the hype, who pile in at the top, they can be financially destroyed. Both things can be true at once. The tech is revolutionary and the bubble is dangerous. And that brings us to the classic investor's paradox. It's this psychological trap that so many people fall into when things start to feel risky. So what do you think most people do? What's that gut reaction when you finally smell smoke, when you sense danger on the horizon? The answer seems obvious, right? They sell, they hit the big red button, and that's exactly the wrong thing to do. This is the cruel, cruel trick the market plays on our instincts. Trying to time your exit, trying to sell before the crash, it's almost always the worst move you can make. Just think about this number, 12x. During the dot-com run-up, the market didn't go straight up. It wobbled. It had scary dips. And all the so-called smart money people, they sold at the first sign of trouble. They thought they were being clever, getting out before the big one. But the market didn't care. It just kept going up and up and up. And they missed out on life-changing gains. And here's the painful irony in all of this. You know who ended up okay? Even the people who just held on through the entire brutal crash. They never sold a thing. In the long run, they actually came out ahead. The only people who were truly, permanently wiped out, the ones who gave in to fear and panic sold everything right at the bottom. All right, so if selling is a trap, what's the alternative? What about those traditional safe havens, the classic shields that investors are always told to hide behind in a storm? Let's take a look and see how sturdy they are these days. Okay, shield number one, bonds. For decades, this was the playbook. Stocks go down, bonds go up. The perfect safety net. Except, in 2022, they both crashed at the same time because of inflation. So that shield, it's got a big crack in it. All right, shield number two, gold, the 5,000-year-old classic. Sure, it's been on a run, but the volatility we're seeing is, wow, it's a huge red flag.
And then there's shield number 3, and this one might surprise you. Other stocks. Yeah, a study from Goldman Sachs found that during the dot-com bust, the best protection actually came from boring, stable companies that paid dividends.
But let's just circle back to gold for a second. Not long ago, it dropped 9% in one day. So you have to ask yourself, if your quote-unquote safe haven can drop like a rock overnight, just how safe is it really? So, we've looked at the history, the bubbles, the psychological traps, the broken shields. Where does that leave us? What is the one thing, the only real answer that's been proven to work?
And I'll be honest with you, it's not sexy. It's not exciting. It's actually kind of boring. But here it is. Buy, hold, and be patient. That's it. Invest slowly, invest consistently, and just hold on. Hold on through the fear, through the panic, through all the chaos.
Now, please let this one really sink in. Because if you take away only one thing, let it be this. The absolute worst decision you can ever make is selling in the middle of a crash. That's the moment you turn a temporary loss on a screen into a permanent loss of your actual money. And that brings us full circle, right back to the AI paradox. Here's the deal. AI can be the single greatest innovation of our generation. It can also be the biggest investment bubble of our generation. And the real key, the thing you have to understand, is that it's probably both. Both of those things are happening at the exact same time.
So at the end of the day, this whole conversation, it's not about whether AI is real. Oh, the technology is very, very real. The only question that truly matters is this. Are you prepared for what comes next? Because a storm might be brewing, and the only thing you can control is whether or not you'll be ready for it.